So this is the last FOMC of the year, and in my opinion, the markets are not going to be too focused on the rate cut itself, right? Because right now the markets are expecting for there to be a 25 basis point rate cut, and so if we see that, the main focus is really going to be on what Powell has to say, right? The forward guidance from the Fed, whether or not we're going to see rate cuts next year, how many rate cuts we may actually see. But that's if we actually get that sort of talk from Jerome Powell. And looking at gold right now, we can see on these intraday time frames, we're pretty much just stuck inside of this range here. So you can see it on the daily time frame, a lot of wicks just, again, you can see it with your own eyes in comparison to these large candles that we see here towards the left. Look at the price action that we're getting right now. Again, large wicks, smaller bodies, not the best price action. Looking at gold, or excuse me, looking at the 4-hour, again, same story. You're just seeing bouncing up and down, just kind of barcode price action, you can call it. Now let's talk scenarios. What's funny is I actually have a friend that tomorrow he put a bet that the Fed will do a 50 basis point rate cut. Now I personally think he's gonna get cooked and he's gonna lose his money, but hopefully maybe Powell and the Fed decide to go crazy. They do a 50 basis point rate cut and my boy gets paid out. But actually, going back to the markets here, if we are to see that 50 basis point rate cut, the markets are here looking at gold. The gold is going to turn, in my opinion, extremely bullish off that information. It's not going to wait for the press conference at that point. It's just going to go based off of that surprise. And again, even though in my opinion tomorrow we could see liquidity spikes, like say we stay around these areas here, we could easily still see liquidity spikes and kind of go back to these lows and then reject to continue towards the upside, right? But again, until we're really breaking off above like the 4240s, then gold really is still very much within this sort of intraday range here. Again, that's very, very unlikely. The more likely scenarios, we're going to see a 25 basis point rate cut, and we'll see the markets, again, probably some volatility spikes around that time. The markets will be waiting for 2:30 press conference from Powell. They'll be waiting to see what sort of signals he gives out, and then from that, the markets will then position themselves. If you see that the Fed is actually giving good signals, like talking about further rate cuts to come next year, and that the Fed is in support of doing more rate cuts, maybe they won't say how many rate cuts they'll do, but they'll say that they are most likely going to continue on path to cutting rates. Again, that could be more of a bullish fundamental narrative for gold here, right? We'll just have to wait for the technicals to align. But if we see opposite of that, if we see let's say a 25 basis point rate cut and we get a more hawkish Powell, then in my opinion, that's just going to lead to more choppy price action on gold. You'll probably just get some further pullbacks or just more ranging price action on gold. And again, it is December, so if Powell decides to come out and just doesn't really do too much, comes out with a more data dependent approach, going with the mixed comments like he sometimes or a lot of times likes to do, then again, in my opinion, gold is just most likely going to stay messy unless we get some sort of new event in the upcoming days. So guys, make sure that when you're trading FOMC, if you are deciding to trade around those times, make sure you lower your risk. Watch out for those spikes in volatility. Don't go and chase the markets, because I promise you, the information that you get from FOMC, the markets are going to price that in for the upcoming days. So if we get a good FOMC, if we get some good comments from Powell, I promise you there will be plenty of opportunities to come in the markets. All right, guys? But all right, guys, I will see you all in the next breakdown.